Traders, what's going on? Jamie Saettele here, SB Trade Desk Midweek Strategy Webinar, second to last one of the year. Pretty wild. 2017 is almost in the books. Let me know that you can hear me and that you can see my screen. Once I have confirmation, we'll dive in as always. All good, says Pete. Hi, Dan, Mark. All right. We're going to start as usual. We've been following this thing for a while, and we are actually coming up on a point that we've had marked down for a bit. That is December 21st. And the reason for that is when the analog for the dollar, DXY, so heavy emphasis on euro here, that we've been following, that's when it turns down. Obviously, the dollar itself is turned down, right? We turned down on 12.12. I guess Fed was the next day on 12.13. And to me, the dollar, at least DXY, looks awfully bearish here. That doesn't mean that everything is bearish against the dollar, specifically the Japanese yen, because to be quite honest, I don't know what the hell's going on there. But yeah, it's doing its yen thing. It's just kind of climbing, drifting. It's in a mindless drift higher. So we will look at that, but just understand this. We are coming in on this date, obviously tomorrow. For those of you out there that believe in these sorts of things, I don't really think I do, but it is the winter solstice, and you can see some interesting market events, shifts happen around, say, winter solstice, the equinoxes in the autumnal equinox, the vernal equinox, the winter solstice, and the summer solstice. Okay, just the kind of 4 times the year there. So what I mean from that is shift in the market. It might be it doesn't have to be necessarily a shift in direction. Sometimes it's just a shift in behavior. So what that would mean from our standpoint, right, or the way that I'm looking at it, it might just mean that you go from a range type of behavior here to more of a trend behavior, right, or a sharper volatility behavior. Just a possibility to consider. I know end of the year here, and many of us are kind of programmed to think just because it's the holidays that markets are quiet. That's not always the case. In fact, sometimes they're even more, volatility is actually more pronounced just because of the thinner conditions. So just because it's the end of the year, holidays, et cetera, does not mean that the markets don't have, or that the markets are necessarily going to be super quiet, right? So just a heads up there. Going to the dollar, the chart of DXY, right? This chart, I mean, the levels have been really beautiful. We've got this channel all the way back to the beginning of the year, and this is simply what we call a downtrend. Finding resistance where we should, rolling over. So downtrend it is in dollar, and again, that's mostly mostly euro, right? Going to US dollar, that's going to include, of course, Aussie, et cetera, similar pattern in with the head and shoulders stuff going on. But with this one, I've actually been following a little bit. We've been following this sideways slope, right? And one of the things that we were really watching, or have been watching, is this median line, right? So here you've got pretty good reactions around it. It's just, it's a decent, kind of a pivot at times. So that's what we're looking at, which was interesting. We spiked into it on 12.15 and came off. If we get back up into it, it's resistance again. Okay, just that simple. it would be up, pretty close to 12,000 at this point. But I don't know if you're going to get there. Just saying that if you were, that's where I'd look for resistance again in the dollar. I'm hoping we do because of euro here. So with euro, I'll bring that chart in. Euro is, let's step back and remember, sometimes too much information, right, can kind of screw with you a little bit. And I think that's been my case here with euro lately, right? We've held a generally bearish dollar view in a bullish euro view, but I've noted it, a number of times in recent months, really, that you've got this. It's so tough for me to reconcile the COT position, which is close to a record now, with euro, and that's the same thing with oil as well. And it's just tough, but you have to kind of get over that and say, you know what, it doesn't really matter. Price action is what matters. And at this point, I mean, look, we continue to respond to the right levels. Probably could have gotten a little more aggressive in buying down here after we held on Monday. Did not. That's okay. The entry for last night, which of course was 118.22, just missed. The low was well, low bid would have been like, or low ask was probably about 18.30 or so, about 28.3 on the gain platform. So that just missed, but there is a specific level or setup to watch here, and that is, so we've just hit we just hit the gap in the month open actually for December. So we could pause, pull back, or whatever a little bit. I still think you could get up to 1920. In fact, I'd kind of like that to happen, because that would be, you'd have a median line here, right? So if we look at this and look at it in a very clear, we'll just get rid of everything here and look at this from a very clear standpoint, very clear angle, right? We'll go to a 240-minute chart. And we've got essentially a new slope to work with, right? So that's just your simple trend line, shift, fork, and your trend line from the top, which I guess it's not really technically correct to call it a trend line because it's only touching 2 points, but it does meet here. And again, it's about 1920. So one thing that you'll notice here, if we do draw in this trend line, the idea being that you want to trade on this angle, right? It would be the most precise way to enter into a euro trade. And if you just look across the chart and see where, it's pretty clean here, right? You've got touches here, touches here. Okay, very good touches, just very precise. So, this is the whole idea. I talk about it all the time, but this is the idea behind slope analysis, is you're looking for the correct angle to trade on, just like a horizontal support resistance trader would look for the correct angle to trade on. That's what we're doing. They would look for the right horizontal level to trade on. We're looking for the right angle to trade on. So I think that, it's a pretty good angle to trade on. I mean, there's a lot of touches there. It gives it a lot of validity. So you can get great, reward to risk opportunities here, of course. And if we can trade up into the median line near 1920, pull back, buy this line, get an entry on this line, maybe today or maybe tomorrow, maybe Friday. Really, you could do that and put a stop below 1828, which is today's low. Of course, you're going to, you're risking a spike or something, but that's trading. So looking for that entry to really just position for dollar weakness, euro strength. How high could we go? I mean, new highs are the goal here. That is, going back to our daily chart. Remember, this is our fourth wave. That's what we are calling the decline from September, with the 1, 2, 3, 4, and it would be appropriate to finish up 2017 the exact opposite way that we started it, right? We bottomed on the first trading day of 2017. Maybe we can go out on top. So yeah, would be looking up, just to new highs. Would not have any set target at this point, although of course one can make, do some extension work. First one would be 22.39. Okay, that's just the 127.2 of wave 4. So still very good upside in euro against the dollar. So that's my plan. The chart's getting, it's getting clearer. And yeah, that's what I would really pay attention to heading into the last week and a half here, and specifically the next two or so days in euro. Okay. Dollar Swiss has kind of been dead. It's actually trading right at its open for this month. I still like the downside on a longer term basis, right? We've got, not going to show it here, but if you go to the long term page, you can see the underside of that long term trend line from 2011. Right, we failed up there back in October, in November, early November, and turned down sharply. So, because of that, I am looking to the downside. All right, let's go to dollar yen next. Daily chart here. I mean, it seemed to have a, we had a 5, right? Let's go to the intraday. We had a 5 down, 5 down, 3 up, 5 down, and the perfect place to stop was that 1310 area. We've just kind of blown through there. So you do have BOJ tonight. I don't really think anything is expected, and not, to put it this way, the tendency for central banks lately has been to be lean on the hawkish side. So I don't know, perhaps they come with a surprise, but from a technical standpoint here, I'm looking lower, but the price action's just not there, right? Like, we get this reversal yesterday, it just doesn't feel right. We continue to just do the dollar yen drift higher, go to the daily again. What would make me pick out points? That's where the square root levels help so much. If we can get back below 1290, then I'd say maybe. If we get an obvious high volume capitulation here, then I'd say maybe we can, do something on the short side here. But until then, it's really a fight, and I hate that feeling of just fighting. Not really willing to do it right here. Here's the volume. You can see we don't really have any big volume. We haven't had any big volume actually since 12/1, which was that Friday. And yeah, we just don't have anything to work with here just yet. The only thing I would say, if you're really short term, is you could follow this channel, really short term channel, right? Just, oops, that's not even what I'm looking for. I'm looking for this channel. Right, you could follow this. So we're more or less there, but the top of the channel, this would be what we call the corrective channel, right? Just connect the lows, connect the highs. It's a little higher, call it 1340. Maybe you get some failure up in this region. And then of course, your big trigger, of course, would be if you break down through the channel, which I would call essentially getting back below 1290 would at least give you a tradable high with some sort of confidence to trade against. At this point, trading against this high over here on 1212, it's just not all that comfortable with it, right? There's still, I guess, the outside chance that we do try to go for this trend line up here, which now would be 114, right? Remember, we reversed perfectly last week at daily reversal resistance. And again, that's just the high day close, right? Take the close, or the high day, take the close of that day, put a line on it, and we failed there. So, at that point, thought maybe we got something. It's dollar yen, right? It's going to stop out everyone before it can make a move. But that's the thing. We actually traded yen okay this year. Pound's the one that's been shitty for me. But yeah, so not much clarity for me on yen. That can change in an instant, of course, if we get some sort of near-term capitulation. But yeah, all I'd give you at this point is look for the 114, maybe a little higher, 114.10. That is really the last possible area that I would even consider short. After that, I don't see how you can be a bear, because after that, I think you probably you're breaking out. I mean, that would be you're breaking out at that point from a trend line that goes back to 2015. Okay. Yeah, so that or below 1290 gives you something to work with to position for a short. Until then, sit and watch. Hi, my usual questions, S&P index. Yep, we will look, of course, as always. Now, here's another thing, right, with the Japanese yen. Often, although not as much this year because it's been a very strange year in terms of correlations. They really haven't been there that much. But if we look at gold, which is making good on its reversal from last week, we had the weekly reversal at a level. We have turned up. Remember, I had that the post featuring the thing about gold. No one wants it, everyone hates it, right? That's what market lows are made of. Often you do used to get a correlation with gold and yen. So if I put up yen dollar here with gold, right? For the most part, if you're going into a very strong upward move in gold, if we've made some sort of a low, it's very difficult for me to think that the Japanese yen, and we're looking here at yen dollar, not dollar yen, it's very difficult for me to think that yen dollar is just going to fall apart, right? So either the gold thing's totally wrong, or or this relationship no longer exists. Look, I love where we bottomed here in gold. Okay, the seasonals are right, the sentiment's certainly right. I've showed you the COT stuff, which is on the site. You've had just panic selling in the metals, and all these things combine to suggest that we are headed higher in gold. You got the DXY analog, again, that's mostly euro, but still, if you're going to see a significant weakening in DXY, it's very difficult for me to think that dollar yen is just going to go screaming higher. But let's look at this gold chart. So this is not a trend line, okay? It's not this. I think the better angle is actually the shift fork, right? So that's where it's moved over in time and price. And we have here, promising, I would say promising price action. We have yet to go overbought on the 4 hour. That's something that I would want to see. but pay close attention to, if I go to the daily, pay close attention to 1270. Okay, you could pull back from there. If we do, then I would want to see support on this median line, which you can see has been, it's been okay. I'm just looking for points of reference here. Since, it was resistance on the way up, on the initial way up, right? So just looking for something, a positive structure to work with on the near term for risk management purposes as we head, higher in gold here, as I think that we have actually put in a decent low. So the 200-day average and the low here from 1114, again, that is an important spot to watch for the gold market. Would not be surprised to see us pause or pull back a little bit, but then I would be looking for a higher low, okay? Probably back near 1250 or so. All right. If we scream higher through this, then we'll reassess. But we're coming off of, pretty deep bearish sentiment, pretty deep, weakness, strong decline, et cetera, looking for bullish structure, looking for higher lows at this point. Mahai says, do I have a target? Not at this point. There's nothing. You can't really target anything until we break out. I would say that, continue to follow the slope. I mean, this slope structure, we've seen failures on this median line a number of times throughout this year, and that's going to be all the way up near 1340s. But don't worry about that right now. Don't worry about target. What we need to worry about right now is looking for near-term positive structure, right, and following the near-term price action in order to get an idea that we actually have bottomed, right? Because we don't know if we've bottomed. I think we've bottomed, right? All the evidence suggests to me that there's a good chance that we've bottomed. But don't worry about targets just yet, right? We're getting way ahead of ourselves if we start worrying about targets. At this point, we're just looking for positive near-term developments following the deep sentiment low, and then we'll start to deal with targets once we have something to work with. All right, so that's the thing with gold, and to me, the positive gold structure would be something that lends itself to more of a positive yen, which would be, again, bearish dollar yen, but it's just not the case so far. We haven't seen that manifest yet, so don't force it. Okay, going to cable. So first of all, we have this ABC. Remember 2 weeks ago, put out the stuff saying that pound could be bearish. My problem with that at this point, I guess, is that the drop from here doesn't look anything like all that bearish to me. It just looks like a channel. If anything, it could be you could be in a series of 1-2s, right? But you got to let the market prove that. If anything, I guess you could be in a, as I mentioned, a series of 1-2s, or it could just be a flag. It could be a bull flag. Near term, levels to work with. I'd still pay attention to the 3352 area. It's actually this parallel down here, which was support back here at 12.7. 3370, 200-day average is near there. You've got a bunch of horizontal stuff. So that area, 3350 to 3370, I'd look for support. Do look towards the channel, upper channel line on the short-term chart here, and the daily reversal level, 3466, and the high volume level from 12.1, I think it is 12.1 at 3478. So, right in the smack dab middle of a range here for the British pound. You're either going up towards this level, which could be a short if you reverse off of it, or in the meantime, I'm fine to leave buy orders or look to buy the dip, if you will, down to 34 or 33.50.70 for the run up into the top of this range in this target area. Okay, so really very little has changed there. Australian dollar, I think we've made a pretty solid low here, right? We've got the trend line. To this point, we are still trapped under this 200-day average. And until we can get through it, you know, we kind of have to respect the possibility of if we go back and we test former resistance, and that would be in the form, of course, of the median line, which was perfect resistance on 12.5. So, as much as I just want to be long, proper entry suggests that we get back down here to 75.90 at this point. Again, this is going to decrease every day, okay? But we're just trapped under here. If we do end up taking out the 200-day average, we'll have to reassess this, but I will say that you could have a pause up near 77.30 or so, which is going to be the 11.2 high, so that's the November high. It's also the 10.6 low, all right? So Aussie, very, very quiet. It's been a frustrating year for the Australian dollar, with the huge moves you've had in copper, the huge moves you've had in various commodities that typically, Aussie would strengthen with. It just has not been the case. The Australian dollar was very strong, if you recall, back in the summer, and since then it can't get out of its own way. Despite the strength in China, despite the strength in copper, and again, mentioned all the commodities that, iron ore, for example, has been pretty strong. Steel has been strong. Lots of strong markets that Aussie typically moves with, but has not been the case. That's as noted with yen and gold. It's been the case a lot of this year, right? All these traditional relationships have kind of been non-existent. Not nearly what they used to be. Think of the Canadian dollar and crude oil, for example. Okay, so that's the Australian dollar. New Zealand dollar, I'm just following the short-term levels. I put out a thing on Twitter last night that I'm looking at here. Again, so broader focus, I'm actually, I'd like to be buying dips in the New Zealand dollar. The main reason is simply the behavior change that we had. So the push up above the slope here, which was great resistance for a number of trades, but once we pushed up through it, right, we took a long here. I thought we held. Finally, we failed. So this red line, which was resistance, that's now actually going to be a level to watch for resistance. It was support, excuse me. It's a level to watch for resistance. It's actually right in line with the weekly open at 66.94. So that would be an area where you could actually have a short, right? And if we did get that, again, I think you've got GDP later in New Zealand. Where are we at here? Yep, GDP. So that's at 3:45 today, my time. You were going to get a chance potentially to short Kiwi up here at 69.94, and then we could be looking for a drop potentially all the way back towards that 68.90 area, which is where I'd really love to be a bull, right? I'm bullish now, I'm just not long. So a couple opportunities in the New Zealand dollar, okay? A short-term short, a bigger picture long. Dollar CAD. Have we topped? High yesterday, 29.20, 200-day average, 29.32 as it is right now. I want to, I like the downside here, just like I like the long side in the other commodity currencies. Again, it's a matter of setup, right? Setup for entry. got to be careful here. There's going to be, you got a possible head and shoulders, right? This tight consolidation. In order to get some sort of a short, though, I want to see price below, preferably daily close, below 28.26. That's actually the high volume level from, I think it was Friday the 15th. Yes, it is. So if we can get below there, that's actually where we found support today. Excuse me. It's where we found support today. Another thing to note here with the Canadian dollar is that you've actually got a, we are getting, if we get one more down day, or two more up days in the Canadian dollar, you're going to get a DeMark sell, right? Now here you can see the red 13s. Had some pretty big DeMark sells over the years. So like back here, okay, which was an initial drop and then a fake and then another big drop. Back here, pretty good top. This one would have been minor, but you know, still a couple hundred pips on the downside. So again, this was a really good one back in 2012. Point being is that we're at the point now where we're at resistance, and we have a potential DeMark sell. So it's a good combination, you know, for us to get an exhaustion high in this Canadian dollar move. You know, with crude oil, which we'll look at next, pretty tight consolidation, right? Tight consolidation over the last, well, since 11/24, so you know, last 4 weeks or so, and could probably have a triangle here actually. So if I look at it this way, you know, A, B, C, maybe D, E, or you could, this could be an A, B, C, D, E, and we're about to burst to the upside. So that would make sense with the wave count here, right? Especially from this point, from the 830 low, you got a 1, 2, 3, and then sideways 4, and then about to explode higher in a 5. So watch out for that. That could be, you know, if we do get a rejoining of Canadian dollar and crude breaks out again, maybe gives a little help for the Canadian dollar on the downside. But you know, it's pay attention to the currency itself, or the market you're trading itself, right? It's all about the levels here. And bottom line, it's a big one for the Canadian dollar, right? It's pretty fantastic. We've looked at, they showed this, the chart actually from yesterday's post, and this trend line back from 2012, I mean, just this alone is reason enough, right, to be a Canadian or a dollar CAD bear. You've got all this stuff here, right? Very important levels. And then this year, resistance right at the line, okay, a couple times, resistance right on the line, right, a couple times. And we haven't touched it yet, which is why I'm wondering if we get one more push into this level. If we do, we'd have a hell of an opportunity to trade a pretty big turn in the Canadian dollar. All right, let's go to two crosses. We're gonna look at Euro Aussie or Euro Yen and Euro Aussie, and then we'll look at some indices. I know Mahai wants to look at the S&P and the DAX. I also want to show you copper, which is having a pretty big day. It's had a big year. And we can take questions. We can look at anything you want, really. All right, so Euro It's Euro Aussie, Euro Yen. All right. $618. This is the weekly chart. Not just the 618, but massive resistance here, here. Look, the textbook here says we just broke out, okay? This is not the chart I was looking for. I think this is the chart I was looking for. That's not the chart either. It's Euro Pound. This is the chart I was looking for. Okay, so textbook breakout, right? 618 of decline. Measured levels for this move. 135.15 is the first one. You have a slope line there, actually. 136.10, eventually 137.15. Now, here's the question, I guess, that I want to know. One, I'm not all that interested in trading this at the moment. Not because it's not a good chart, but I've come to realize I do so much better when I am trading the dollar pairs for the most part. Not all the time, right? But for the most part, right? If I'm focusing on euro, so let's say that this is a real breakout and we're really going to go higher. Okay, fine. Well, ideally we catch part of that move on the euro anyway. All right. You know, which has to me a cleaner setup with less risk. One reason too is that if I go back to this weekly chart, which you can see, right, how many false breaks from this region, right, where we are right now, how many false breaks have we had from some serious consolidation, right? You had some pretty big false breaks. You know, back in 2013, you had a couple until we finally went higher. You know, again, it's major resistance or major support back in 2014. And of course, it's also the high from December of 2015. All right. So there's just a lot here, I guess, to keep me away from chasing the breakout here. That's all I'm saying. I'm not saying it's a bad chart by any means. It's a good looking chart. It's just not for me. Okay, what I will offer is that you've got a point of reference here. So here's our slope lines. And you see these slope lines here that were the former, we'll make them magenta so that you know what I'm talking about. And what is that thing? I think it's 59. So those, okay. That area now is going to surround the monthly opening price. Sorry, I'm all over the place here. And that's going to surround the monthly opening price, which is 133.93. All right. That area is going to be support, or should be support, if you drop into it. All right. And I would not, if this is a break, if this is a move that you want to play or attempt to play or whatever, you know, buying into the, again, that month open 133.93, let's just say an entry at 134 with a stop at 133.55, right? Today's low. I would not risk anything below today's low. Because again, with this move potentially being one that could fail, given the area we're in, it's been a failure area for breakouts in the past. You don't want to obviously get caught with too big of a stop. There's no reason to, right? If we got back below here, that to me would actually be a short signal, even though I am bullish euro dollar. It's probably more of a yen thing, which is, you know, it does like to screw with everybody. Let's look too at the momentum on this. So if we look at the momentum on euro yen, okay, here we go, euro yen. All right, we are getting a divergence signal today. We had one at the last top, actually, on 1025. We did have a couple back here. This one would not have led to a top. We had one here, that was a top. All right. So not all divergence signals are tops, but some of them are. So that's, you know, another reason to, I guess, be wary, if you will, of a false breakout. And there's another reason, actually. I got another one for you. Let's see where we at here. You're going to get a DeMark sell today. This move here gives you a 13 DeMark sell. DeMark sells you got over here. This is actually a DeMark buy. So there's a lot to be, I guess, concerned about, if you will, as far as believing this breakout. You know, you've heard it said a lot, but, you know, fake outs, you know, false breaks, whatever you want to call them, are oftentimes some of the best trades and setups in the opposite direction, right? So a real nimble trader might say, well, you know what? I'm going to put an order to buy 134 because that's the month open and it's got these lines here and it was really nice support and stuff and resistance and all this other stuff. And I'm going to put a stop below today's low because if we go below there, I know we've broken the level. But if we do that, I'm ready to short. Right? This tight range, we break out of it, and then we go screaming in the other direction. I want to do something else, actually. I want to see because really tight ranges are actually the ones that are prone to false breakouts, right? Let's look. I've got a workspace for this, as I have a workspace for just about everything. Let's see what the range closes are here. Okay, so we have had, let's see, tight range. The range, we were talking about a 2.14% range. For Christ's sakes, that's tiny. All right. So the last time you see this chart, right? See the red dots? That means that the 60-day range, I'm talking daily closing levels, the 60-day range was, hold on real fast, let's see something here, okay. The 60-day range was, is 2.13%. The last time we've had a range that small, let's look, was actually back in 2014, September 2014. You actually had the opposite situation there. We broke down at that point, but then we reversed. So that would have been a fake out. Let's see if we have any other instances of a range this tight. 2006, you would have broken out, pulled back, but you really wouldn't have stopped. So that would have been, I guess, a valid breakout. I'm just trying to see if there's a tendency for tight ranges in euro yen to give way to false breaks, and that's it. Okay, we don't have anything else as far as a range that tight. So doesn't tell me a whole lot. Thought it'd be interesting to look at. Kiwi getting a little bump here. Remember week open 69.94, okay? All right, let's go to Euro Aussie. That was the next one that I wanted to take a peek at. All right, so here's the big chart. I mean, this is massive. Okay, you've got this trend line goes all the way back to 2012. Perfect support back here in April 2016. Remember, this is the line that was resistance on the election, actually. And we've been trading on it for 1, 2, 3, 5 weeks, right? Last week we took a dump here. So when we go to the 4-hour or daily chart, here's the daily 4-hour. We are looking to see if there's any sort of bear structure. So remember, we had this. I said look for resistance at 54.59. We traded up into it, pulled back. We traded up into it, and that was it, right? So there was no reason to do anything because it was doing nothing up here, right? It went up, pulled back, and now we're going higher. So what I would watch for is watch the channel up here, and you've actually got the moving average on the 4-hour chart. That's 120 period moving average, which again on the 4-hour chart is a 20-day moving average. That's going to be right up here. So you're talking, what's the high over here? What's this high? 55.56. So, call it 155.50s. That might be an area where you fail. That's, the trend line. So if we have a bearish structure, if this is a head and shoulders top giving us, if this is our neckline, you might actually have an opportunity here to take a short, and maybe this is more bullish Aussie. I don't know, but it's something interesting, I think, to look at, especially given what the deal is with that long-term chart on Euro Aussie, right? So this could be a hell of an opportunity as well. Okay, copper, and then I will do some of the indices, and then I will look at actually the bonds. Copper, obviously one of the big moves all year. Daily chart, we just broke out here today. If you do get a pullback over the next couple of days or whatever, just watch for this level to hold support. That's all I'm getting at, right? I like to tell myself some stories sometimes, like maybe we're going to see maybe we're going to see a pullback in copper, hit support, and then go higher, and that coincides with Aussie pulling back and getting long, and they both break higher together. I don't know, but something to tell myself to feel good. Bonds. This is TLT, right? This is the long bond ETF. It's tanked for 3 days, like we haven't seen it tank in a long time. And what we've got here is really, it's got a huge head and shoulders pattern. So if you break down below 122.60, good night. At this point, I'd be looking for, on the bond futures, you do have a very clean 5 waves down from here. So I'd be looking for a bounce, and resistance is probably 126.55 if you're going to find resistance in the bond in this ETF, because that is where Yeah, the high volume level is, and that's from 12.1, right? So I would look at that level. Okay, now we will get to the DAX and we will get to the S&P. The DAX is going to be more interesting than the S&P. The DAX rolling over hard. Right, weekly. For context, of course, same thing that it's been for quite some time. Resistance is really big up here. And we had the 5 down, right? 1, 2, 3, 4, 5. And then we've got all these movements. It looks like A, B, C, 1, 2, 3, 4, 5. Right? So this is a diagonal from here. So that's 3 up, 3 down, and then a diagonal 1, 2, 3, 4, 5. I think we actually talked about this possibility last week, did we not? About getting the final push in the diagonal, because we had said that we had all these 3-wave movements, but we could get one more. You know, it wasn't really sure. So at this point, I would say that this is complete. Here's the 60-minute chart. It's a pretty sharp turn lower. Let's see if you can get any sort of negative or bearish slope on this. I mean, obviously you can draw something. I just don't see. Okay, so this is interesting, actually. If this is just the trend line, right? Simple trend line. And you have something to work with on the downside here. You've got trend line, so just draw your regular modified shift fork. If you get a bounce here, okay, you have points of reference to work with, which is great. If you get a bounce here, what you're looking at is you're looking for resistance probably somewhere back on this line, which is the 25 line, right? Which is going to be it's going to be where more or less off of here, right? So you're just looking for the angle to trade. If we break down below here, if you break down below here, it's clearly some sort of influence here because it was just support. Okay, so the best thing to do from a bear, if you're for a bearish setup, would be to consolidate on this, find resistance here, or just consolidate and then break below the median line, and then you'd have resistance to trade into with a tight stop. Okay, so that's the best way for this to work out, but it's promising that at least there's some sort of slope here on the downside, which we haven't had obviously in a long time. All right, let's look at the S&P. That's the Qs. I kind of find it pointless to count waves at this point. Otherwise, you'll just be saying that you're in a fifth of the 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 fifth, and you keep on going. So, you're starting to see some momentum divergence. Let's go to the hourly. I think probably the best thing to do on this is not even really think about the S&P until you get the cleanest of clean 5-wave moves to the downside. You know what I mean? Once it's so clean that my 3-year-old says, "Daddy, that's 5 waves," then then I'll say, well, okay, then it's time to maybe go the other way. But it's just such a fight up here, right? I mean, at this point, even with today's little drop, I mean, this is still a 3, right? And you've turned up. You know, are there targets that we can look at here? Extensions. Let's see. Let's look at that. Well, you're trading actually at one of them. So you're trading at the 2618 extension right now. That's from the range from 2015 down to 16. Mahai is saying, wondering if we'll have the January thing, January effect. Yeah, I mean, you know, it's markets tend to, if there's going to be a turn in the market, a lot of times, right, you go into and it happens early in the next year. So that's certainly something that could that I'd watch out for. You know, as far as levels here, as far as levels are concerned, you know, that fib I just pointed out. I mean, I don't have anything else really to work with from that standpoint. You could look at something on the S&P here, right, with the square root levels, which actually are pretty good. I found are pretty good. And the next one here is actually 2726. Okay, that would be the next square root level on the index. This is a linear chart. You can see we've actually traded through the top of the channel now. We could probably need to do log here, but if we go log, you can actually see that we're just at the median line, and the next level, which is the 75 line, would actually be above 2726. So maybe blowout into the end of the year. I don't know. The S&P 500, it's not just, you know, it's not just a drift higher, but there's really no volatility either. So it's very difficult to get a read on it from a wave standpoint. It's tough to read the waves when there's very little emotion involved, which low volatility means there's no emotion, very little emotion involved. You know, the DAX, that's an interesting chart. That also, by the way, if the DAX is turning down, you know, that would be that would add to the bullish euro against dollar thing. Here, my opinion on Bitcoin, on the other mania. Well, let's take a look. So certainly a mania. Actually coming off again. It's coming off here recently, so. So the extension levels that have been hit, we've actually hit the 1,795% extension level, and yes, that is a level. The next one is actually 2,903%. That would be at 29,490. So I still think that Bitcoin looks like silver in the late 70s and early 80s. You know, we've gone now through 1, 2, 3, 4 extensions. This level intersects at the end of January, and it's 29,490. But here is the silver thing that we were looking at. So we're just looking at daily close here of silver futures, and hold on, it's loading. All right, so what we've done here, sorry for the delay, it's loading, I can't really do anything about that. All right, so what we've done here is I've compared what I think might be the point at which we are with silver, or where silver was compared with Bitcoin here. So, you know, if we scroll back, you can see, you can take the price action from February of 1979, which actually, so if you take your Bitcoin chart, you can draw this horizontal or slightly upward sloping diagonal line over it, which is essentially a breakout from a running wedge, right? And that's what Bitcoin did back, or that's what silver did back here. So you're talking about a running wedge, right? You break out and then you go into your complete crazy blowout. Well, if we do the same thing with Bitcoin, we're going back to June of 2016. So not as many dates, but you know, it doesn't need to be because it's you know, it's a shorter, more compact thing, right? It's like time's been shrunk here, and you actually overlay that, and it's pretty interesting as far as its you know, as far as its price behavior and its movements. And this would say that we're pretty much there. So let's watch and see how this unfolds over the next couple of weeks and months. But if we were to really get a sharp decline, just watch for a series of lower highs and lower lows. It's that simple, right? We just watch for behavior to change. And, you know, at this point, it hasn't changed enough to say that that's it. But, you know, here's another thing. If you're counting the waves and blowouts, right? So like if you were counting this wave in silver back here and you said this is 1, 2, and then you went, this is 1, 2, 3, 4, 5, 3, and then you were looking for the final fourth and fifth waves, you never got it, right? There was no fifth wave. That was it. And if you look at Bitcoin here from its point from the similar point, so we're going from right here, which is right here, okay, which puts you back here in, what is that, September, then you can count something quite similar, right, where it's kind of a 1, 2, and then this is your 3. What if there is no 4 or 5, right? Or if there's a 4 and then you don't go to a new high and a 5, or a truncated 5, right, where you make a lower high, but it's the final fifth wave. So this is my best answer for you right now, Mahai, is that we are, yes, it's manic, it's crazy, no doubt about it. And you know it's manic when you say it's manic and people call you crazy for saying it's manic. Like that's the one that really gets me. But whatever, it's fine. You know, follow the price behavior, and this is the best I've got on it. There are other, you know, we see other things, of course, popping up, like the crazy companies that are changing their names and you know, like this company, Riot Blockchain, right? So this thing, I think, is also at a top as well. So this is that company, you probably read about it. They were a biotech company, and then they changed. They said that they are changing to a blockchain company. And if you read their investor presentations and stuff, they haven't even done it. They say they intend to be a blockchain company, right? And they've signed a letter of intent with another company to purchase something that has to do with blockchain. Like, it's, the whole thing is crazy. So if you just look at this chart, it's actually nailed resistance. Pretty good, actually, resistance here on this channel. This is a weekly chart. So that is another maybe telltale sign, if you will, that this might be completely done, at least for a while. So I don't know. Hope it helps. That's all I've got though on the Bitcoin stuff. And yeah. All right. So I'm wrapping it up there. I am going to get this archived for you all. Thank you for your time. Let's see. Okay, Dan asking about, yeah, Dan, just send the send an email to info@sb info@sbtradedesk.com so we can put you on the list for the alerts. All right. All right, guys. All right, take care. Have a great rest of your week. All right. Bye. Merry Christmas, Pete. Thank you, my friend. Thank you very much. Merry Christmas.